Hey everybody, Cowboy here. Today is a clip from our morning show where I review the gold and the Dow Jones charts on a macro level. So high time frame, enjoy that. If you want to find us, the website is at the bottom of the screen. You can also zap that QR code. And after the video, there is more about us and how to find us. For now, enjoy. We've done the gold chart many times, so if you go back over our live shows, I'm sure you'll find it. But basically, what I think is happening is that price on gold is winding up for a move up. It's just, I think it's going to continue in this range. It might, if it drops down to 1600, we talked about this yesterday. You can look at our live show yesterday for details. If it drops down to 1600, I'm backing up the truck. But I remember, I think our prices were somewhere around 1800 and maybe like 1650 where price might drop to, more or less. You also could, price might not get down to 1650 or 1600. It might actually stop at 1670. So, I just would look at this at a range and treat it like that. And you have a midpoint halfway through the range where price could bounce. But top and bottom of the range for now are what I would look at. And that's on the macro. I mean, this is like each one of these candles is 3 months worth of price action. So, this is taking a year to go top and bottom on this range. It's a long move. And it's going to be, gold is one of the few charts that really has a stronger fundamental edge to it, if you take my meaning. A lot of the movements on gold are going to be fundamental, which is, a lot of charts. I mean, I don't want to say they're not fundamental, but the machinations or machinations of the dollar and such are going to have such a huge effect on it, on markets and pushing money into things, and people funding projects that really shouldn't be seeing any money. Let's look at the Dow Jones Industrial Average. Let's see, Dow Jones. I'm going to go to my dashboard here and do it that way. It's not on here. If I go to dashboard, US 30. So this is on a 30-minute chart. I'm going to expand this out a bit and take a look at the high time frame on the monthly. Look, we talked about this on the S&P 500. It's going to be the same thing for me on Dow Jones. I think you've seen a peak, and I think that there's a decent chance that it's not going to be able to go above this recent peak. So on this Dow chart, you're looking at a month's worth of price action on each of these candles, and you have a peak out here in 2022, early 2022, late 2021 at about 37,000. That looks like January of 22. And then you have this second move up, and everything I'm seeing, there's a chance, and I don't mean, we're at a kind of a delicate time. There's a chance that price is not going to be able to make it past this 35.6 that it peaked out at right here. So this high that we've seen, this recent lower high, might be an attempt to rally past this top and not make it, because money's just more expensive. Rates have gone up. You can't cram money into investments like you used to, because money is not as cheap to buy. So price could head down from here, and I would look for price to kind of stop at 32,000 and kind of take some cues from the rest of the market. To see what that might look like, I'll jump to a lower time frame. And we'll say look at the 3-hour time frame. So this is a much lower time frame now. In fact, I am not going to look at that. I'm going to look at pretty much the daily time frame. So we're going from the monthly to the daily. We're skipping the weekly, which is fine. So this move up, actually the weeklies. I'm sorry to jump around and change my mind, but I do need to see the weekly. It's going to be a lot easier to chart. I would look at, see this low here, this 28.5. That's going to be important. If price does make that low, we're just looking at some prior pivot points right here, right now. So 31,300 is going to be important. 28.5 is going to be important if the Dow cannot rally up. Right now, it's trying to rally up. It may touch this 35 0.8 thousand. It might touch that. It might not. I mean, it really depends on what's going to happen with money. Right now, we have Powell being pretty hawkish, and with Powell hawkish, there's just a really good chance that the stock market's not going to rally. Plus, we're seeing a lot of data come through not strong. And so I'm going to go ahead and end the charting here and just take a quick look at the data. But right now, I would expect to see something like this. Right? You might have a couple bumps on the way down. It just depends on what happens with the money, really. I mean, the Dow is just a function of how cheap money is, how much money is being printed, how much money goes on the Fed's balance sheet is like almost directly proportional, or at least correlative to where the Dow goes, right? Okay, so we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.